as I've been saying for weeks, I think we're in the midst of a real bear market. I'm hoping that we're at least halfway through, both in terms of time and in terms of damage. I wouldn't be surprised if that were the case. But, you know, when you see, let me give you a quick example. We run several in-house strategies, and one of our strategies took significant risk off last night as the month closed. You have an S&P 500 right now and a NASDAQ 100 that are you've got longer-term and intermediate-term moving averages flattening out, and you've got shorter-term moving averages like the 6-month and the 8-month starting to be in decline. And really, none of that changes when you get a day like last Friday. So the best thing that you could say right now, I think, is that sentiment is really bad. For example, in the middle of February, we had a situation where AAII bulls fell below 20% for the first time since May of 2016. Think about what was going on in May of 2016. It was dawning on us that Donald Trump was going to be the Republican nominee for real, like in real life, and we were headed into Brexit. And, you know, you had serious sentiment issues in the markets, and ultimately that resolved to the upside. And I think this one will as well. So I'm not looking for an absolute horror show from here, but it could be very choppy. It could be very treacherous. So I think what that means for long-term investors is just, you know, kind of manage your own expectations and continue to pursue your strategy. Shorter-term traders, I think you want to tighten your stops. I think you want to let a lot of setups go by and not pursue them. And I think you want to take profits a little bit more quickly than you otherwise would. And I think you'll be fine. I think you'll get through this if that's what you do. But really, there's no reason to think that this is over. The price action doesn't say that it's over. And that sentiment reading that I just gave you, that leads to the types of snapbacks that we saw last Thursday and Friday, but it's very rarely sustained. So now you've got an RSI, a relative strength reading on the S&P, that's like 44. Not oversold enough to get crazy bullish, but in the middle of no man's land, really, and no real trend. So that's how I see it, and I am behaving and thinking accordingly.
Doc, perfect day to have you. I can't think of many people who are more, quote-unquote, tactical short-term as you and your brother and those who do what you do for a living. What kind of trades are you seeing real-time in short-term duration in this market?
A really short-term duration trade, Scott, is in the SPY, SPY, of course, the S&P 500, the 430 puts. Now, 430 is not a critical area necessarily, but they were buying with an expiration of Monday. And the reason I think they picked that one, Scott, is the uncertainty over the weekend. Now, that's many days away. We understand that. But those puts are already closing in on. They were buying the 430 puts when it was 437 this morning. I bought the 437s because, as you know, I like to buy at the money and sell against it as we go in that direction. I haven't sold against it yet because it looks like we might just push right down through that area pretty fast and hard. So we are seeing that. We've obviously seen the move that Josh is talking about with the sentiment index, the VIX, moving up into the multiple percent range. As you know, 32 means 2% moves a day. We're not seeing that in the market yet, but that tells you people want protection. And I was with a group called the Gentlemen Bosses last night down here in Puerto Rico, Scott, and they were asking some of the same questions as far as, well, what are we likely to see? And I said, end of the world trade only comes once. So you don't want to be on that trade, and who are you going to collect from, even if you're right? So what I'm doing is whatever gets beat up the worst, I get a little more interested. But short term, Scott, it's energy, fertilizers, and cryptocurrencies, because all of those Russians are using. We've seen a flood of capital from rubles, that's how I know it's Russian, into various cryptocurrencies because they're being cut off from banking systems. So because of that, Tether, record volume of ruble to Tether. And that's one of many so-called stable currencies that people would go for. And I think energy is just going to fly. You saw what happened when we released from the Spur. That's not even 3 days worth of crude oil, Scott. We're going to see 120 crude so fast if this keeps getting worse over in Ukraine, because The sanctions will mean that energy is not going to be flowing where it's needed right now.